Okay, what's up, guys? So, for today's video, I'm going to go over a couple things that I think are pretty interesting. I'm going to be talking about shorting, I'm going to be talking about margins, I'm going to be talking about some Robinhood stuff. Yeah, just a bunch of stuff. I was, trying to think of some important stuff to do, and I think that what just happened with GameStop, I think needs to be explained. I think there's a big move, and I don't know if you guys understand really what happened here, so I'm just gonna go over it in detail. So yeah, so GME exploded, as we all know, yesterday, more than 100%. It ran all the way up from what did it open at? It opened at 20 to it ran up all the way to 38. That's pretty crazy. Um, and then today it ran a little bit more, ran up another 35%. And this is insane. I haven't really seen anything like this, to be honest with you. And this happened for a couple of reasons. One was that Ryan Cohen, he was on the board of Chewy. Um, he recently threw in a lot of money into GameStop. Not invested it, but just gave it to GameStop. Um, he also joined their board, and Ryan Cohen's a pretty big guy. He developed Chewy, he formed the business, so he knows what he's doing. And so the other big factor was a short squeeze, a massive short squeeze. So when you short a stock, basically what happens is that you go to your lender, you go to your broker, and you say, "Hey, I am going to buy. I'm gonna borrow some stocks. Sorry, I'm gonna borrow some stocks from you, and I'm gonna sell them immediately." And what's going to happen is it's going to get down to a value. It's going to go down, and I'm going to buy those shares, and then I'm going to give you back the shares, and I'm going to pocket the difference, right? So let's say a company's trading at 50, and you open up a short position. You borrow 10 shares at 50, and you think it's going to get down to 40. So you borrow 10 shares, and you immediately sell them. And let's say it goes down to 40. What happens is you buy those shares back at $40 a share. You give, or no, you don't buy them back, but you give them back to the to the broker, and you pocket whatever that difference is. So that's a 20% difference. So that's how shorting happens. So with a short squeeze, what happens is there's a lot of shorting for a particular stock. GameStop short ratio was 150%. That's insane. That's a lot of people shorting. A lot of people shorting. I don't think I've seen a short float higher than that. And what happens is when a stock keeps going up, shorts have to cover. It means they have to buy stocks even at a higher value, because you can't just borrow a stock for nothing. You have to, if it's going up, you have to buy the stock. So these shorters had to start covering. And what happened was, because it kept going up, they had to keep covering. And because they had to keep covering and buying, it just fueled more upwards movement, and the more upwards movement fueled more buying, and it was just a circle, and it caused this massive price action. It also helped that GameStop's float was 40. I should say floating shares. That's how many shares are offered to the public. So if you have a low float, it means that there's not a lot of shares offered, and it means more people will want the shares because there's not a lot offered, obviously. And so it just, when more people start buying, it increases the price, and that's what happens. That's why these low float stocks can just go crazy. Like you see 200, 300 percenters, and GameStop had a 40 million float. That's not crazy low, but it's low for a well known company like GameStop. So yeah, so that's what happened with GameStop, a massive short squeeze. Um, and I just figured you guys should kind of know what happened with that. Another thing I want to talk about is margin. So margin is basically like, I'm going to pull up my Robinhood account real quick. Um, I don't know why it always pulls up to the Rhode Island page. It's kind of weird, but yeah. So here we can see my portfolio, and it says I have 7,000 buying power, but I go over to cash, and it should say over here somewhere cash and margin. And maybe if I go to account and I go to history, not history. Sorry, it's right here. This is what margin is. So margin basically allows you to borrow money from your broker to use as leverage, to use as buying power, and it's good. Margin is good if you are investing in like something like Apple or Facebook. You can throw margin in there, and what happens is with margin, you can either double or triple leverage your account. So you can, if I have 30,699 in here right now. I actually have 60,000 buying power, or sorry, not 60,000, 40,000 buying power. Ooh, um, instead of the 30,000. And I can just use that buying power, that extra buying power to buy and sell stuff. It's good, but it can also be bad. Obviously, if you lose the margin, you actually have to pay the broker back in what's called a margin call, and they ask you to either sell your stocks or to give back the margin, and that's not good. You don't want to be margin called, and so to not be margin called, you actually have to hold a certain amount of cash in your buying power and not spend it. So I think right now it's something like, for me it's like 2,000 or $3,000 to not be margin called. Um, so I'm just holding that cash right now. Um, but yeah, margin is good. You have to be like a Robinhood Gold member to use it. Um, but I would suggest looking at it if you're looking at like buying something like Apple or Facebook or something really good long term, like something safe. I don't know, anything really Ethereum, something like that. But yeah, that's what margin is. So the next thing I want to go over is the about section, I guess, of Robinhood, and you see a lot of these numbers, and I just want to talk about them quickly. Kind of just like everything around here. It can be a little confusing, I guess, for some people, some newer people. But right now I'm going to focus on a couple of this stuff. So obviously CEO, you know what that is. Employees, you know what that is. Headquarters, the year it was founded, right? So market cap is the first thing we're going to talk about, and the market cap is the number of shares outstanding times the share price. So this means that there is 935 million dollars worth of BNGO being traded right now in the market. That's a lot. It's a lot. A billion market cap is a lot. Usually, when you see like low cap stocks, mid cap stocks, like stocks that have like a 1 million market cap or a little bit more, um, those are lower volume. You don't see a lot of movement there. They're also usually low float. So yeah, so we're going to talk about PE. This one doesn't have a PE, but PE is price to earnings ratio. So it basically means the difference between how much the company makes versus how much their shares are. So a lot of these companies you'll see, I think GrowGen has a really high PE. Um, yeah, they have an 845 price to earnings ratio, which means that their price is 845 times higher than the amount of money they make, and that is a lot. But for spec plays like this, where these are companies that are making money and they're growing, the PE ratio doesn't matter as much. But it's just something to be aware of. When you have companies that have really high PE, they are subject to dump and drop a little bit. So just keep an eye on those stocks like that. But yeah. Um, Dividend yield. I think I talked about dividends a little bit, but basically a company um, will give you money for holding shares in that company. So AT&T has probably the best dividend yield on the market or a best stable dividend yield, I should say, on the market at 7.23. So this means you get 7.23% of your holdings every year back in cash. And I think their dividend is 52 cents a share. So if I had, oh shit, if I had 500,000 invested in this company, I'd make around 40K at the end of the year just from holding the company. And this is how the rich get richer. I'm telling you guys right now. If you get a lot of, if you start getting a lot of money, just throw it into AT&T, throw it into CVS, something that has a really strong dividends, because you can just sit back and let it just grow, and you have something called drip. the dividend reinvestment program, and that just reinvest your dividends, obviously, back into the company. It rebuys those shares. You just keep making more dividends, and it kind of just steamrolls. So dividends are great, especially if you're a long-term investor. Average volume. This is the shares being traded on the day, or the average shares being traded during the day. That's pretty self-explanatory. High, low, open price. This is when it opened. Volume is how many shares it was being traded today. 52-week high, 52-week low. That's pretty obvious stuff. Um, News, analyst ratings. So I want to talk about analyst ratings real quick. These people are usually paid to give their ratings and their price targets. When you look at something and you see price targets and ratings saying like buy this or buy that, you want to just dig a little bit more, because a lot of times these people are paid to talk about their price targets. So like right here's a good example. I switched over to Yahoo Finance. Here's some good analyst price targets that are not good because they don't really make sense. There's not a big reason why this company is a good company, but it should not be trading at $16 a share. Usually, like I said, these people are paid to talk about these price targets. Don't follow them. If you buy a company and you look at the price target and it says, oh, the average price target, the lowest price target is 9. It doesn't mean that it's going to get to $9 a share. It could, but don't base your buys on analysts. I really need to say that because I got caught in that when I was starting to trade, and it just really fucked me up. Um, so yeah. I think that's gonna be it for today. I kind of need to keep some ideas for tomorrow, but I think I'm gonna talk about support and resistance and why you shouldn't buy and sell on the levels and wait for reversals, as we saw in those really stupid TikTok videos. But yeah, I hope everybody has a great night, and I hope we make some money tomorrow.